how the markets are falling on the Fed's mistake. But before I get started on today's video, I got a little bit of a rant to kind of go off on. The highway department, the road department was painting new highway lines on the main road going out of Astoria. So basically it's Marine Drive, Highway 30, heading out of Astoria, the fog line, the white fog line, they were repainting that. Somebody decided that it would be cool to take their vehicle and drive over the wet paint and now mark all over the road. The white fog line is now like just completely vandalized for like 2 miles heading out of town. It is about the ugliest thing that you can look at. And I just have to think, like, man, what is it that's going on in somebody's mind, inside of in their thoughts, that they think it's cool for them to go and just do this amount of damage that everybody now has to witness and be part of for at least a year and a half, until this wears off, if it does. And now we have to now sit in this and take part in this ugliness. Like, this dude is so disgusted with himself on the inside, he wants to share that disgust with everybody in the world to make sure that everybody else can now witness and feel as disgusted as he is. That's what is going on here. I think about it, this is the problems that we now face in society today, is this exact thing. When you have individuals who think it's cool to vandalize the road in such manners so that we can all now witness this every single day of our lives. People who come to visit Astoria, this beautiful city, get to see essentially what is graffiti all over the highway. It just makes me sick to my stomach to think of it and see that. It's horrible. All right, let's talk about economics. Thank you for joining in on today's live stream. We got 83 people watching with 17 likes. Go hit that like button when we join in on the live stream. We'll get more people to join in and have a conversation here. It's always so much better when we have more people in the comment section. So now, this is what I find very interesting. You see the markets tumbling. You see everybody losing their mind. They're talking about how the Federal Reserve made this mistake and that they didn't cut rates, and it just goes on and on and on. Now we see the Dow tumble like, 900 points or something like that. I think it was even 989 or something at one point. I think is what the most that it had tumbled at one point. And now I have to think, like, everybody's all pissed off. They're thinking, man, the Fed screwed up. They're going to ruin our lives. We're headed into recession. The jobs is not as good as everybody who was hoping that was going to be. Like, the job expectations weren't as positive. And everybody has like this general feeling that the Fed screwed up. What I find completely amusing by this, like the whole thing, like I just step back for a minute and it would be like, okay, I understand that a lot of people have misunderstandings of what's going on with the Fed's monetary policy. I know a lot of people are stuck on election year. A lot of people are stuck in the markets, all this stuff. And I just step back for just a second and I just look at this and I think to myself, what changed? What changed? What changed from 4 days ago, 5 days ago, 6 days ago to today? Absolutely nothing. Nothing about the monetary policy had changed whatsoever. It's the exact same monetary policy that we had been living in for, well, they changed a little bit of a few months ago, a month ago when they started doing balance sheet adjustments, but ultimately there is no difference from the Federal Reserve statement to today and the actions that they are taking. Is exactly the same position that we were in. But the perception has lost their mind. They think that the Federal Reserve has really screwed up and now they are acting accordingly. Think about this is the credible threat theory. If you understand the credible threat theory and know exactly how this operates within the markets, all this communication that is coming from the Federal Reserve has the markets reacting. It is totally working. Now, one of the things that you have to look at, and just again, all the reasons and excuses and whatever, like I'm sure a lot of it is very valid out there. But again, just kind of push it back for a minute and just take a look at something. Take a look at that 10-year treasury. Like all interest rates in the economy, whether it's credit card, mortgage loans, car loans, whatever. Like if there's a loan out there, if you follow the 10-year treasury, you are going to see where interest rates are going to head. And if the 10-year treasury, the yield on it is starting to fall, then you can take, assurance that if that continues, right? I mean, not just a day, but continues into the future, that you are going to find the interest rates on a lot of loans out there will become available at a lesser rate, given it time. See, this is the risk on kind of thing. Like, people are like, oh crap, we don't know, recession, uncertainty, they're keeping interest rates, all this uncertainty stuff leads people to go like, okay, crap, I'm needing to be in a position in which that I have like eliminated the risk, or at least pushed as much risk off the table as I can. And that's why you're seeing gold and you're seeing bonds rallied together. Like, this is not a typical situation. It has been over the last few years, but prior to, you know, the screwing up of the monetary policy, taking it to the quantitative easing and the lower bound of zero and all that other stuff, there was a time when bonds and gold would be inverse to each other. Like, people who are buying into bonds and bond investors would look at the gold buyers and say, you guys are speculators. You plan on selling that in the future for a higher price. The bond investors would be investing, buying the bonds to get a return on the yield. All right? So when you're buying into bonds, you are looking for that interest rate payment for the most part, right? Now, when something happens, when the bond yields fall to an incredibly low yielding price, good Lord. When they fall to an incredibly low yield and the price is elevated, that turns the bond investor into a speculator, because they're not looking at the return on yield. What they are looking at is the idea that the yields are going to go down into the future and that they would be able to sell that bond off for a higher price, very much like the gold buyer would be. So now we are again looking at bonds as an investment when the yields are much higher, but when the risk takes on, right, and the risk goes into it, that starts driving the yields down. And again, the speculators could look at that and say, if the yields go down, the price goes up. And when you have all this certain uncertainty that has taken place, that would start forcing people into the bond market, again, driving down yields. And again, that would then leak into the greater economy as time goes on, creating that stimulating effect. Now, again, people are very nervous about the future. So you see the stock market going down. You see like all these issues with the jobs market or something of that. And this creates that uncertainty that is out there, which pushes the risk, you know, pushes the idea into risk. But if you get there and we realize at the end of 2 months that we're not in recession and that we're not falling into, you know, economic hard times as much as people are predicting it by the Federal Reserve keeping interest rates elevated, and you actually find where the interest rates have come down and the neutral interest rate is still now elevated, you might actually find where the Federal Reserve says, hey man, we don't have to do anything at this time. Not only did the economy get a stimulating effect from the lower yields as time went on, right? Again, at the first it seems very, you know, that doesn't seem right as the markets are crashing and stuff like that. But give it time and people then take that on, yeah, I'm pretty certain there's not a recession. If that was to be the case going into the future, you're going to find where the Federal Reserve doesn't have to lower rates at all. And that all this action taking place right now will actually be stimulating going into the future. I know this is like, it's really backwards thinking from what a lot of classical economists are going to say. What people think of the Federal Reserve and what it is that they are doing, they're going to listen to this information. They're going to be like, dude, you got it backwards. I don't, right? I don't have it backwards because the Federal Reserve has already stated, right? They didn't state it outright and communicate it out there very clearly for people. But if you go and you read through their speeches, if you go and read through their documents about monetary policy, the adjustment of interest rates is no longer an effective tool. It does work, but not nearly as good as the communications about it. The communications about it work incredibly good. Like, that's the most effective tool that they have is their communications. And you can see it taking place right now, considering how much action has taken place within the markets right now. And the Fed hasn't done anything. They haven't changed anything, right? Except for the people's perception. That's it. And that shouldn't even really been changed. Like, people knew there was no rates cuts coming. They shouldn't be they shouldn't be freaking out about this. Like, they knew that they weren't coming. But they were wishful thinking, you know? All right, 287 people, 295 people, and 67 likes. Go hit that like button. We'll get it up over 100 people here in just a couple of minutes. It's a race back to zero. This was the easiest market bet I've ever made. Yeah, I don't know if it's going to be a race back to zero, man. I mean, I really don't. I think like right now, when you see the 10-year treasury yields falling as fast as they did, based on the market's perception of what's going on and the risk that is coming into the future, that's going to be a stimulating effect going in. Like, you think about it, banks can loan their money to you and me for risk, which is a higher interest rate, or they can lend it to the US government, which is essentially no risk. And that 10-year treasury is the main like instrument of debt that the banks are looking at as far as where the rest of the interest rates are going to go. Watching that 10-year fall is then going to now have the ability to provide loans out there into the economy at a lesser interest rate. They can either loan it to the government at 3.8, or they can loan it to us at a slightly higher rate. Okay? So and that, again, it takes time. It has to continue on in that fashion. So I wouldn't be surprised if you would see a lot of recessionary pressure, media attention being pushed out there to try and continue on with the risk idea, to continue to push people into the bond market. To say, hey man, I'm worried about stocks, I'm worried about housing, I'm worried about all this other stuff, I'm going to put my money safe in the bond market right now, continuing to drive down yields, and that will have a stimulating effect going into the economy, into the financial markets as time goes on. It's like, it's not easy to see, but once you have given up on the idea of what it is that the Federal Reserve should be doing or could be doing or did in the past or all that other stuff, you kind of eliminate all that as far as trying to predict what it is that's coming into the future. And then you go and you look at the credible threat theory, and you understand the credible threat theory, and the communications that are now taking place within the mainstream media is the propaganda. Right? You got to look at that stuff and say, okay, what is it that they are trying to communicate out there to the mainstream media? Because that's the monetary policy, and is that belief, that perception that people have. You can see it working right now. This is the reason why I keep putting these videos out like this, is because we are seeing it in real time right now, how this credible threat works, how the credible threat theory does. You know, and again, if you're new to my channel, you're going to have to go and become a member. It's $1 a month. Go back and watch all the member-only videos that we have done, where we break down the Fed's speeches that talk about monetary policy, talk about the communications, talk about all the stuff, even Basel III and Endgame and all that stuff. We have broken down all these things in member-only videos so that the average person can now join in on this conversation and understand what it is that's happening out there, because this stuff is not being communicated out there through the mainstream media. It is not. I mean, period. What they are communicating is the monetary policy of the Federal Reserve, which is a mind social, like a psyops game, right? A mind control game. And it really is, because you can really see it with the idea of a 2% target. Like, anybody who is falling for this idea that the Federal Reserve is going for a 2% target has fallen into that mind game, that brainwashing, you know, so it's essentially what it is. And, you know, again, like, I try to share this with you so you can see it in real time, so you can witness it and how it's happening. Moving on, 377 people. Man, you guys are just loving it up in here. Right on. Keep hitting that like button, guys. We're going to be out here for probably another half an hour, maybe 20 minutes or so. Smoke that thumbs up like Cheech and Chong. Thank you, All-Nighter. Thanks for being here, brother. All right, inflation about to skyrocket. Yeah, I don't know if it's necessarily going to skyrocket again, like, you know, if we're going to start witnessing the issues that we had over the last few years, but I could see where we don't find it coming down significantly. Like, you think about it, a lot of people are anticipating, like, I think a lot of times when we hear like inflation is coming down, we think, okay, prices are coming down. That's not inflation coming down. Inflation coming down means prices won't be going up as much. They're not, it doesn't mean prices are coming down. Deflation means prices are coming down. Disinflation is also prices going up, just not as fast as they were, right? So even disinflation is still inflation. It's just not as much inflation. And low inflation and stable prices, which is the Fed's mandate, doesn't, like, a lot of times I think I've even communicated this incorrectly when I say it, and so I'm going to try and be very aware of how I communicate this part of it. But the Fed's dual mandate is low inflation and stable prices. I think a lot of times I said low and stable prices, low inflation and stable. I mean, the way I communicated it was that there would be like low prices, and that's not the case. That's not what the Federal Reserve's dual mandate is. It's low inflation and stable prices. The prices could be elevated, but as long as they're stable, right, they don't continue to go up at a dramatic fashion, that's what the Federal Reserve is looking for, low inflation and stable prices. So again, like, this is what the Federal Reserve's dual mandate is. And if we understand the dual mandate and understand that they need full employment, which means, like, if you have a lot of people working or historically low unemployment, because it doesn't necessarily mean that you have a lot of people working out there, it just means you have a lot of people who are not on the unemployment insurance, right? Because that's really what they are looking at, is the low unemployment. They say it full employment, but I think that's very, very subjective. However, those are the two. That's the dual mandate: low inflation with stable prices and full employment. Now, if we are in a situation in which that you see the inflation that is coming down, right? It's not going up as much as it was. Prices are not increasing in the dramatic fashion that they once were. They may be increasing, but they're increasing at a pace that is much slower than they were. That's success. That's success for the dual mandate. Now, whether or not we like it or not, or we agree that it's successful, that's a whole other question. But in the Federal Reserve's dual mandate description, that would be successful, right? Same thing, like, not with prices and the employment. So to me, when I hear people say, oh man, they are making a mistake, and I'm like, how, man? They're like achieving their dual mandate goal. Like, they're not mandated to make sure that a person, like, the election happens a certain way, or that markets stay elevated, or the house prices stay elevated, or something like that. That's not part of their dual mandate. None of that stuff is, right? Low inflation and stable prices, full employment. That's it. That's their mandate. And if they are achieving that, even if it doesn't feel good and the pain is out there and people are like, man, this is a painful experience, retail is very slow. I know, I work a retail job. It's very slow here at the lumberyard. People feel that, but if you still have the dual mandate being success, if they're succeeding at their dual mandate, hey, you're going to have to feel some pain and suffering on account of it. And I'm not saying that's a good thing. I'm just saying that's what the Federal Reserve is going to be looking at. They stated it a long time ago. Households and businesses will have to experience some pain. Have you experienced pain yet? Is it painful? Maybe a little bit, but is it pain that is so unbearing that it makes the Federal Reserve actually do something? Not yet, right? It may feel that way for a lot of people, but when you have low unemployment and you have inflation coming down, that's not painful enough, right, for the Federal Reserve to do something about it. Remember, again, some of the things that we have covered inside of our member-only live streams is stuff like, just recently, Christopher Waller talking about getting ready for interest rate adjustments, but said that it would be a grave mistake to cut too early. See, like, if you cut too late, it's going to be painful, which is what the Federal Reserve said they were going to do. They said that the households and businesses were going to experience some pain, right? So he said that if we wait too long, it's going to be painful. Very much in line with what the Fed said they were going to do. But if they cut too early, it's going to be a grave mistake. I wonder which one we are going to experience, a grave mistake or a painful experience like they promised. Just saying. Like, all these people who are wishful, hopeful, thinking that the Federal Reserve is going to be lowering the Fed funds rate soon is obviously not considering that the Federal Reserve ammunition is the Fed funds rate, and they do not want to give that up. They're not going to just like, oh, well, we got all our ammo back. It took 20 years to finally get it up to this kind of level. You know, it was a very painful experience for a lot of people over the last couple of years. And man, we, finally got it up here, got a hold of it. And you know what? We'll just throw that away. I mean, does that sound like something they're going to do? Hell no, right? They are not going to lower rates unless they absolutely have to do it. Like, they have no other choice. And when you have expectations of lower interest rates coming into the future, that is almost at 100% now for September, when you got the markets believing that, look at the condition in which that the financial markets start heading into. already you're starting to see the 10-year Treasury falling dramatically. And again, nothing has changed. Nothing. Not a single thing has changed with monetary policy over the last 2 weeks. All right, 458 people and 143 likes. Let's get it up to 200. We got 143 likes. We can have it at 200 here in the next 10 minutes. Often tied to receipt of federal funds. All right, actually, there hasn't been 1 quarter of negative growth. A recession will require 2 consecutive quarters of negative growth. Yeah, and I agree. And that's where I find like it's really difficult to now use that as the indication of a recession, simply because I just don't believe any of the numbers now. Like the federal government, right? Not the Federal Reserve, the federal government, right? Came out with this FASB 56, right? This fine, what is it? I can't remember what the FASB stands for. But anyway, I did a video on it. It was the early part of my channel, like when I first started the channel up. I did this video called FASB 56 Legal Lies. And in that video, I shared the link to the news article, which also had the links to the government's documents, talking about how they cannot give us the real numbers. For national security reasons, everything that we see out there, as far as market numbers and all that other stuff, is completely fabricated. Like I don't know if it's 100% fabricated, but we know that they may not necessarily be accurate. And they have said this. We are going to do this for national security reasons. It's okay to use these numbers for all your investment portfolio, retirement portfolio, all this stuff. It's okay to use these numbers. They're still accurate enough for that, but they are not the real numbers. We need to hide those for national security reasons. Once I heard that, once I understood it, I was like, okay, so I don't care about the numbers anymore. They're not real. They don't mean anything anymore. Like once you told me they could possibly be a lie, they're all lies. Every one of them, because I don't know if it's the truth or a lie. So I can't take it for any kind of possible truth to it. What I do look at or think about is the direction that they move and by how much, because I think that's very important. I think that's going to be a lot more accurate to understand where it is that we are headed. But what they are, I don't agree with. So it's very difficult to then say like we have negative growth or we have inflation here or whatever. Maybe, I don't know, maybe, and that makes it even harder to now try and internalize a lot of this information so that you can now conduct yourself, because you're looking at this thing going, well, is it real or not? And again, like when I look at the Treasury, I don't think about it being like at 4.2 or 3.8 or something like that. I think about it falling. How much did it move? Right? That's the important part. Like, did it go up or down, and by how much? All right, let's go check out some of these super chats here. Isaac at War, $4.99. Thank you so much. Thanks for the late night streams the other night. Very based. Hey, thank you, Isaac. I really appreciate it. I gotten a lot of compliments on that video. I don't even remember the title of the video right now. Maybe somebody could put the title in the description, because I can't remember exactly what I had titled it. But it was the other night we did a live stream. It was kind of a late one, and we really started diving into some pretty deep topics, just like, I like to talk a lot about how I got the channel started, like what I was going through, like the changes that I had made, giving up drinking and stuff like that. And then starting the channel up and being dedicated to the channel and how that changed my life. A lot of people are looking at that and saying, man, that is like, a pretty incredible story. I don't think about it being an incredible story, because I didn't really think about it when it was happening. I was just like, just living my life. But I look back at it and I was just like, yeah, I was really dedicated to making videos. I put out a video every single day at just about, before I was getting paid on it. I was just doing YouTube videos like I was getting paid. And I think it was the energy and the, all the commitment and everything to being like that. Like if I'm acting and behaving and feeling like I am getting paid on YouTube, eventually it'll just start happening, and it did. Right? So you have to live the life that you want to live. And we learned that, this idea of faking it till you make it. Sometimes it is faking it, but not really. right? Like you feel like you are that person. Like I told the story about going up and speaking for the first time in front of in front of an audience, and I knew I was not a public speaker. I mean, I had never done it before, so therefore you could not be a public speaker. But I knew that if I got up on stage, faced my fears, went through the nervous, went through the stuttering, got the thing done, at the end of that, I would be a public speaker. And it happened, and I was. And at that point, everything in my life now said, hey, dude, you do public speakings. Like, one day I was there, the next day, like one day I wasn't, the next day I was. But the entire time that I was leading up to that moment, I was thinking, I am going to be the public speaker. I am the public speaker. I'm going to do this. I'm going to make this happen. And at the end of this, it will be confirmed I will be there. Right? And live that life and go in that direction. And things like the universe just starts kind of forming around you to meet that condition. And it all comes down to the way that you're thinking. It literally comes down to what it is you're thinking and feeling. Like just like that guy who painted ran over the fog lines heading out of town. You know what it is that he is thinking and feeling is going to be deteriorating his life, because look at what it did to all the energy, especially like I'm sure I'm not the only one who was that aggravated by this, right? And think about like what it is that he has put out there to the world. Hey, boom, you get this negative feeling that I did, and everybody gets to witness this. Now think about the reflection that he's going to get back from that. Do you think that he's going to get reflections of business deals? Do you think he's going to get partnership? Do you think he's going to get opportunity? Is that all going to come from that action of screwing up the fog line after they painted it, to him driving all over that and just, for 2 miles? I mean, is that the type of energy that the universe is going to be rewarding? Hell no. It's going to punish him for it. In fact, it's going to come back and it's probably going to take time and effort and everything else away from him because he had done that. Right? Same thing. It doesn't matter. It was just as easy for him to not do it as to do it. Right? And if he had not done it, he would have been in a much better energy and probably would not be reflecting a universe of negativity coming towards him today for his actions that he had took yesterday. Same thing. It doesn't matter what you're doing. The way you do one thing is the way you do everything. Okay? And once you figure it out, once you learn that, then you don't behave in that fashion because you know the universe is going to come back and punish you for it. All right, let's go check out this other super chat we got here from Angry Capitalist. I love the name. Speaking of BS numbers from the government, Powell referenced private companies' labor data over the BLS. Indeed. And again, like the Bureau of Labor Statistics. So, again, like I don't necessarily look at those numbers as the reality of the situation, right? Like I don't think we have low unemployment. I think we have high unemployment. But I don't think it's necessarily the unemployment rate that the Federal Reserve is looking at in order to conduct their monetary policy. So since what it is that I feel and what I think doesn't really matter to the Federal Reserve, right? Like they don't care what I think, I can't like say, hey, you need to look at it differently. I don't do that, right? I just look at it and say, okay, the Federal Reserve sees fairly low unemployment. That's achieving their dual mandate. They will not cut rates because of that, regardless if they should or shouldn't, right? I mean, it's just like, you just have to look at it like it's a systematic machine, like almost like they don't have a choice to it. Until this happens, they can't take action. No matter how much people wish and hope and dream and pray, or administration screams at them, it doesn't change that. All right, cruising on down here. Wow, lots of people in this comment section today. Yeah, I agree, Stay Curious. This thing is loaded up. We got a lot of people. 505, right? Well, 496. 500 people and 200 likes. Keep hitting that like button, everybody. Real estate prices have peaked. This is the best time to sell your home if you can. Yeah, no, I don't know. I don't agree. And the reason why I don't agree with that is because everybody said that the best time to sell your home was back when I bought my home, right? Everybody says, dude, you're going to be underwater, you're going to screw up, you're going to lose your house, you're going to foreclose, you're going to do all this other stuff. Not a single one of those things happened. Not a one, right? Not one. My house, the equity, the price went up the neighborhood is still in, in an elevated position. Like everything about like market crashing in housing didn't take place. Now it took place in transactions. So if you're a mortgage lender, you probably experience a housing market crash. If you are a builder, because a lot of builders are very nervous about it, you're probably experiencing a housing market crash. If you are a buyer, right, you are experiencing a hell of a mortgage or a housing market debacle, right? Whatever you want to call it, because you're simply priced out of the whole thing, right? So the crashes happen in transactions, but not in pricing, right? Everything that's involved with the sale of a house, the building of a house, anything like that, yeah, all you people are facing like some serious pain from it. But if you're a home or a property owner, right, just owning the home, you're still doing quite well, right? I mean, unless you bought it like within the last couple of years, and there's very few people that have bought that many homes over the last couple of years to be so significant in the market that would create a downturn of underwater houses. In fact, most homes are not underwater. In fact, there's less homes underwater today than there was prior to the pandemic. All right? Yeah, I don't see it. I don't see it that way. Okay, moving on. Okay, I think houses will eventually go down, but Simon will be fine in his situation. His channel is pretty big, and he works every day on it. Yeah, I think you stay curious. And now, when I think about that, it was just like, how much, like, can you give me a percentage on what you think it might go down? Like 10%, 20%, 30%? Like, how much do you think it's actually going to go down? And then if it does, how much do you think it actually costs to replace that house after it does go down? Can you replace the house for the same price that you are projecting that the percentage of it going down is? Like, let's say you got a $400,000 house out there and it drops 25%. Now it's $300,000. Can you build that house for $300,000? Will a builder be incentivized to build a house if he can only sell it for $300,000 when today he thinks he can sell it for $400,000 and he doesn't want to do it? Like, tell me, how tight will inventory be if we have a housing price crash of that kind of magnitude? We would see even tighter inventory. There's nobody who's going to be building in a market of crashing home prices. That doesn't make any sense. So no, I don't see it. What I see is the Cantillon effect. I see ever increasing amounts of separation between the rich and the poor, and there's two classes of people: the property owners and the capitalists. That's it, right? Those are the only two people who are going to live independently. I mean, there's more classes of people, but those are the only two classes of people who will live independently. Everybody else is going to be subject to the state, the government, to an employer, or something else out there. But the capitalists and the property owners, they live independently. And they are separating themselves from everybody else. Every single day, we find that wedge is growing ever deeper. And people are hoping and wishing and dreaming and praying that that won't be the case. There's no situation in which that you are going to be able to find where the conditions are going to be accommodating for everybody. That doesn't happen, right? If it was, it wouldn't work. There's a separation between the rich and the poor because of the major changes that have happened to the way that this economy is functioning. We used to be a producing, saving nation. We produced the world's greatest products. We pushed those products out there to the world. The world sent us their money. We raised our standard of living. That raising a standard of living increased the prices of everything that we were enjoying. They started producing foreign production, or the foreign producers started bringing in their production. The domestic manufacturers couldn't compete. They left to go produce in foreign nations. We find the separation between the rich and the poor, and the only way to fix this, to fix it, is for everybody to now suffer with lower standard of livings, working twice as hard as they normally do, paying off all their debts, never buying anything new, doing this for generations. Like literally generations of people having to suffer through an incredibly low standard of living, working incredibly hard to pay off the debts, and maybe, just maybe, we might become a competitive nation with manufacturing again. I doubt it. I very, very seriously doubt it. There's no way that we can condition ourselves to be competitive when there is nations out there who are already conditioned to be competitive. We have to lower our standard of living to do that. Does that sound pleasant? Does that sound exciting? Does that sound like somebody you're going to vote for? I doubt it. Right? How are you going to vote? You're really going to vote for somebody who says, listen, guys, we're in a bad spot here. You're all going to have to work twice as hard for less. You're not going to get any government subsidies. You're not going to get any kind of help from us. And you're going to have to do nothing but pay off debts. And not only are you going to do it, your kids are going to do it. Your grandchildren are going to do it. And then maybe your great-grandchildren can then start a life of being a producing nation again. That's how far down the road. You will never see it. That's the point. You can start it today saying, hey, we have to make the right decisions today for our children, and then our children and our grandchildren will suffer the consequences of our actions today because of it. Very much like we're suffering the consequences of our grandfathers' and great-grandfathers' actions in setting up the system that we are now suffering through today. Like they had a chance, right, way long time ago to say, hey, let's stop diving into luxuries. Let's create a situation in which this doesn't happen. And they were like, nah, that doesn't work. We better sever ourselves from the gold standard, go on 100% fiat currency, and just start living off of the production of the world. And that's what's going on. So now we get to borrow into our existence all this higher standard of living. How long can that last? Like, can that last forever? I doubt it. I doubt it can. But there's really nothing else out there that can replace it. So in the meantime, there will be ever increasing amounts of new money that comes into the system. The separation between the rich and the poor will continue. And you're going to find that the capitalists, who are going to get blamed for this, even though they're making a good decision by postponing their pleasures, by buying into investments, chasing the excellence, they're going to get blamed for this situation, but they're going to live independently, and the property owners who are taken in the position of getting into as much property and houses as they can are also going to separate themselves from the poor. And we can say, hey, this is a politician's fault. I don't say it's a politician's fault. See, I went and read this right here. This is Cantillon's essay on economic theory, written hundreds of years ago. He describes the situation right now. Like, there's no point in reinventing the wheel. This guy talked about it. He talked about how this has happened 200 years ago, and he was talking about it happening hundreds of years before that. So to think that there's anything different today that was existing over the last few thousand years when it comes to the economy, it's very short-sighted. It is very, very inaccurate to the way that economic forces actually operate. All right, 600 people. Get it up to 300, guys. We got 242 likes right now. We should have it at 300 before we end this in the next. Ooh, gosh. Okay, I got to end it here in about 3 minutes. All right, let's get a couple of more questions in while we can. Saying you want 1 Bitcoin is like saying you want 1 furlong of gold. It makes sense and shows you are really uneducated. Oh, thanks, Kyle. Really appreciate that, man. Get out of here, bro. All right. No, USA is exporting a lot of oil at the moment because other countries are not taking US dollars. I don't believe that. I don't believe that for a second. I think that the other nations are accepting dollars, and that a lot of the propaganda that is out there talking about how the federal or how the dollar is now like an unwanted item is completely garbage. Just take a look at some of the things that we've talked about, King Dollar Destroyer. There's nations out there who have issued out a lot of debt in dollars, and they need to acquire those debts acquire dollars in order to pay those debts off. And so, yeah, I just don't see it like that. Okay, we got another one here. $5. Is there a constant... Well, if there is a constant begging for lower rates and crashes, what does that really say about the true state of our economy? Yeah, I agree, Crack, in 2019. I mean, it really does. When you are wishing and hoping and praying that there is going to be bad news out there so you have lower interest rates, what does that say? Like, what does that say? That says, we are wishing and hoping that we have a recessionary pressures so that we can get better interest rates. That, it is such a far off, I don't even know how to, like, what is that? It's like conflicting, it's so conflicting. uh, I love that bacon quote. Oh, is there a bacon quote? Where's that at? I missed it. All right. Recession, we got stay curious there. Okay, recession is inevitable, but real estate will depend a lot of local areas. Lots of rentals are there, higher chance. I would think of a crash. Depends on the land available, local economy, etc. Yeah. Simon, you're the best. Thank you for all your efforts. Share the things you've learned. Yeah, thank you, Brody. Thank you for being here. All righty, guys, we got to call it quits because we're getting a little too close to the end of my lunch break here. You guys are so awesome. Thank you so much for being here. Thank you, everybody, for those super chats. We got $14.99 in super chats. Lots of likes on the thumbs up. We got 578 people watching with 278 likes. Go hit that like button, everybody. This was a great stream. I think it's very important that we talk about this stuff, talk about what it is that's happening as far as the communications that are coming from the Federal Reserve, what that does to the markets, and what it is that the Federal Reserve is truly trying to do with their monetary policies and pushing that propagandized information out there. It's very difficult, right? It's really hard to wrap your head around all this, and there's so much like BS out there, especially when it comes to a lot of these economists out there who are trying to predict what the Federal Reserve is doing. Many of those people do not understand that the Federal Reserve has changed the way that they are viewing things. They don't go for a 2% target. They go for a 2% average inflation rate over time, and they have no mathematical formula for figuring that out. Right? So what is it that they are doing for their monetary policy? We discuss it here on this channel in a way that very few other YouTubers are doing. So thank you for joining the channel. Thank you for being a member of the channel. Thank you for hitting that like button. And if you want a copy of the essay, Cantillon's essay on economic theory, there is a link down in the description. It's an Amazon affiliate link. By clicking on that link and buying one of these copies, you will also help the Uneducated Economist out by, giving a little bit of support through the commission sales of it. But you do not have to buy this book online. You can get it for free at the Mises Institute. So just type in Cantillon essay on economic theory. All right. Do the Google search, you will find a free copy of it over there at the Mises Institute. However, if you do click on that Amazon affiliate link, anything that you put in the cart for the next 24 hours after clicking on that link, I will also get a commission for. So just go and buy whatever you want from Amazon. You don't have to buy the essay. You can just go buy whatever you want, right? And I will still get a little commission off of that. So go click that Amazon affiliate link, go fill up the cart, and make the purchase within the next 30 days, and you'll be supporting the Uneducated Economist. All right. Thank you very much. You guys let me know.